Now, growth in Africa is dependent on increased infrastructure investment in various countries on the continent. However, infrastructure problems in Africa pose a serious threat for the movement of goods within Africa. Now, joining us to discuss Africa's growth opportunities is Roy Daniels. He's the head of Africa Trading at RMB. Thank you so much for joining us, Roy. Let's just look at Zambia, well, celebrating its independence today. That successful Eurobond. So all in all, it looks like an economy that is growing right there.
Certainly one we like. We certainly think that there's still potential for rates to fall. Currencies holding pretty firm for us and holding steady, slightly weaker, but nothing to panic about. But certainly one that we enjoy. I think if we look at that dollar auction that they had, that dollar bond, it was fantastic. 11.9 billion worth of bids. They pushed themselves from 500 to accept 750 million. You know, trading at 5 5/8 when it went on auction. I think trading last I saw, and I've been away for a little while, sorry, trading last at around, I saw it about 5.15 to 5.20. So a good result for them and fantastic. I think it really is an upside potential country and certainly one that we're staying long of at the moment.
Now looking at Sub-Saharan Africa, we had the IMF releasing a report which was late last week looking at growth in Sub-Saharan Africa, looking at growth of over 5%, looking at that report and some of the risks that could perhaps curtail such growth. Do you see risks coming through that could curtail that 5% growth?
I don't see too many. I mean, other than we get a bit carried away with ourselves. I mean, you know, we often see Africa and, you know, this whole renaissance of us leading so the world out of economic downturn. It's a fantastic story, and we sincerely hope the guys don't overstate it or take advantage of the funds that are coming in. I think one of the key things for us when we look at it is say, look, there's a big flow of money coming in. Infrastructure bonds have done exceptionally well. I mean, the infrastructure bond that we had in Kenya was brilliant. I mean, it was like the elephant deal in the room, you know, the elephant in the room deal. It was fantastic. Guys loved it, bought it like crazy. The key is that the money then goes into the infrastructure. I think one of the key things I find, and certainly I was up in East Africa recently, and you know, when you travel on some of the roads, I'm a little bit surprised at how it hasn't developed. And I'm not saying that it's deteriorated, I'm saying that it's not keeping pace with development. So the drive from Entebbe to Kampala is becoming quite a nerve-wracking journey at the moment. But it has to keep pace. We're not able to move goods through Africa well enough. So there's not enough trading from country to country through Africa. So let's hope that these funds do start going into infrastructure. It's key to the success of Africa and certainly important for us to achieve our growth potentials.
We've got Zimbabwe also going for an infrastructure bond, looking to perhaps better their power stations right there. What do you make of that infrastructure bond that Zimbabwe is putting forward?
C-rated country, so there's not going to be any offshore investment in it. I think it all has to be taken up locally. Compare that when we look at the auction that Mauritius want to hold. You know, I think they're BBB+, so there will be lots of offshore interest in that. But at a C-rated country, there's unlikely to be that. It's only $30 million. It's a small issue, but I think they are looking then for local business, maybe some regional uptake in it as well. But I think from an international point of view, the rating is too low for them to get any interest from there.
You say you were in East Africa, you're looking at Uganda as well as Kenya. What about a market like Kenya? We know that they're having elections pretty soon next year. I was talking to my market watcher. He seems pretty positive about the economy. We did see a bit of a slowing down in economic growth in Kenya, but things seem to be quite positive. But when you look at the elections, could they pose a threat to economic growth going forward, or do we have anything to worry about here?
I think when we look at Kenya and the elections coming up, it won't put it onto a negative watch in any way at all, but I think it'll put it onto a bit of a neutral stance. Certainly from our point of view, from a trading point of view, we might still look at some of the ranges we can possibly trade in, but we wouldn't be aggressive buyers just yet. And there have been small pockets of violence in Kenya. They've been dealt with very efficiently and effectively by the government, which is good. But we think that rates could probably tick up a little bit. And I think that probably bodes also for Uganda, not so much Tanzania. I think Tanzania could come a bit lower. But I think in Kenya we might see a small uptick in rates, but nothing is going to run away with it. The currency is not going to blow out to 107 like we saw previously up, but I think there's potential for it to weaken slightly.
And other regions or other countries on the continent, where are you finding value right now?
Ghana. Ghana is good value at the moment, I think. You're probably picking up, I think there's a 3-year auction tomorrow, 3-year bond auction. We certainly will be bidding in the auction. I think if we look at it, yields around 21, 22%. I think these are good yields for you to get into. Currency is a little bit of a concern, but nothing to be overly concerned about. You know, the weakness has run a long way now, so I think the currency will be stable to weaker, but the yields are good. And of course Nigeria, you know, you've always have to hold Nigeria. I mean, that's one of the key things. I mean, it's if you have an African portfolio, it has to have Nigeria in it. I mean, the growth rates, the expectations, the potential, Nigeria is leading one. The talk of it being an economy bigger than South Africa's pretty soon. You've got to hold some of it. And certainly from a domestic consumer point of view, Nigeria is the best looking one of the lot. I mean, there's a huge amount of people, growing middle class, just buying as much stuff as they can. It's a fantastic potential for us.
When looking at a country like Rwanda, it has made great strides looking at the ease of doing business. Currently sitting at 48, South Africa is sitting at 41. So sitting below South Africa right now, is that a country that you're looking at?
I think Rwanda is an interesting one. I think when we look at the ease of doing business and ratings for countries, we need to also then look at the ease of opening a new business. And from an Africa point of view, Rwanda ranks number 1. So that's a sign that the doors are open for business. I think South Africa ranks probably number 6. I think some people that have tried to open businesses in South Africa might argue that 6 might be too high, but there's certainly it ranks at 6. I think Mauritius, I think, ranks at about 3. But those are the countries that have opened their doors for business. In fact, ease of getting electricity, Rwanda ranks number 1. So it shows that it's ready for business and it's open. On the downside, when you look at the top 100 banks in South Africa, Rwanda doesn't make the Bank of Kigali, none of them make the top 100. So that's potentially where we need to look at, is how do we then grow that infrastructure to grow the business to get them into these top 100 rankings. But I think Rwanda, doors open. In the past, we saw a lot of Rwandan money going out into the region for investment. That has now turned around. We're seeing money coming back in. We're seeing Kenyan banks looking to buy parts of Rwandan banks because they see them as good potential returns. So I think certainly Rwanda, I think, is one in that East Africa region looking really strong, and potentially one. On the West Africa side, one to watch is probably Ivory Coast.
All right, and Roy, when you look at regional integration, and we see South Africa kind of moving away from trading with Europe and looking for markets on the African continent, but this pace has been quite slow. Why do you think the pace has been quite slow?
I just think that, I think when we look at some of the African countries, when we look at Kenya, for example, exporting tea, their key market has become Middle East, where it used to be Europe. So there is diversification taking place. I think the biggest challenge for Africa is the trading with each other. It must cost less to try and sell goods internally. You know, I was in Tanzania and I met one of the ladies from the banks chatting to her, and she's building a new house and she's buying her furniture. She went to China to buy her furniture because there's not enough sort of consumer product available for her in Dar es Salaam. So they actually then go to China to buy the furniture. It seems crazy.
And it's all about infrastructure right now, isn't it?
It's all about being able to move the goods. I mean, to be able to move goods from one place to another, and open stores and open shops. We can sell the stuff that people can look at and start to buy.
And where do you see the most growth in terms of the middle income sector, as well as the consumer demand? Like you mentioned, Nigeria, we know what kind of population they're sitting with there.
Look, I mean, I think Nigeria is the big one. If I look at countries around Africa that have potentially huge consumer growth areas, Ethiopia has to be one. 85 million people, but the doors are closed. So as soon as the doors are open and it starts to invite non-residents in to actually open business, I think it can certainly grow. Again, there's huge consumer demand in Uganda and in Kenya, and that's going to continue to be there for us. So they're doing well. I mean, people have got money to spend.
And when you look at growth for Sub-Saharan Africa, are you also sitting at that 5.1%?
Yeah, I think it's realistic. I think if we look at the countries that are sitting at 8%, they're coming off a very low base. So we look at the likes of Angola. I mean, they're talking 8.5%. Angola, they're talking. I think Rwanda is sitting at around 7.5%, but they're coming off low bases. We compare it then to South Africa, but we come off a high base. So potentially for the sub-Saharan region to achieve 5% GDP, I think it's really, really possible.